Hello viewers, in this video I'll be going over WTI, crude oil, or ETF ticker symbol USO. We are currently on active market trading hours and we are down about 75 basis points. On the 1 hour chart, I do believe we may head lower due to the MACD is pointing downwards and we breach the moving averages on the 1 hour. On the 4 hour, we see the candles may be closing below the 50 moving average and the MACD is starting to converge. On the daily chart, we do see a possible support with the 18-day and the 200-day, and I do see this acting as support. And for resistance, I do not really see any chance of us heading higher, but the possible resistance will be at a price of around 14. And this price resistance dates back to May of last year, but I highly doubt that we will reach to that point anytime soon. Reason why, we just had a weekly inventory report. We have a larger withdrawal in crude, but a build in gasoline. We are looking for the gasoline, and we just reported a smaller withdrawal than expected. 1.2 million barrels. Expected was 2.13, so there's quite a large gap in the forecast. But for crude, there's a larger withdrawal than expectation. So if we were to head higher, and that price movement is about 10% move up, but if we were to move lower, that price movement is about, I would say, the price movement is about 2.7 move down. And on to the next module. On here, I'll compare the current trend with this trend. This trend dated back to March 14th to May 23rd, 2018. I'll point out why these two charts are identical. So let's start in the beginning of the trend. We had the chart starting off on the bottom of the Bollinger Band, and as it made its attempt or its trend higher, it found support in the middle Bollinger Bands twice, one there and one here. So what we have here, I'll just make these channels pointing up to signal an upward channel, and we have another one reaching and touching the upper Bollinger Band. And what we have here is it's in between the upper Bollinger Band and middle Bollinger Band, and we'll just make this a rectangle. So this is where we are currently at. So on the chart below, I'll compare again. So we start out on below the middle Bollinger Band, and then it found support in the middle Bollinger Band as it climbs higher and trends up, and it does find support twice again, and I'm doing another draw of the channels, an upward channel, and then we do see it reaching the upper Bollinger Band, and right now it's in between the upper Bollinger Band and the middle Bollinger Band. So this is where we are at in the current trend. So there are 1, 2, 3, 4, 5, 6, 7 points, 1, 2, 3, 4, 5, 6, 7 points that are similar. And since the trend or patterns are similar, there's reason to believe that the outcome will be somewhat similar. So let's check the forecast model. So again, the chart that we took a look at was March 14 to May 23rd, 2018. So I'll go day by day. On day 1, or 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out, we look like USO or WTI crude oil would be heading lower. Back then, crude oil dropped 5%, so there's a possibility we may fall around that amount. And here's where I compare the line to. So what we have here is the current trend, and I compared it to March 14. It looks somewhat identical. And that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.